Good morning, Jags. This is Fahad. Today is Monday, October 12th. Let's get started. This is a NASDAQ chart in front of you. Very interesting day that's going to be all night long. Russell 2000 index futures have been flat to slightly down. They're up only not even a point right now, but NASDAQ is just surging big time. NASDAQ futures are up 190 points right now, more than 1.6%. And all of our favorite stocks, the ones that we have positions in right now and the ones that we have consistently endorsed. So for example, C Limited is trading at 175 now. Remember, we were talking about it, that this was starting to break out. And Alibaba is going to gap higher by another $5. Mercado Libre is attacking $1,200 resistance. That's Meli. Amazon is up nearly $100 in pre-market. So everything that's in e-commerce or SaaS is going to be powering higher sharply today, while the rest of the market is going to be likely struggling. And the simple reason for that is this is what's happening all over Europe. France recorded its highest single day increase in COVID-19 cases. I think the high was 29,000. This is the trend that's in front of you. On Saturday or Sunday, France had 29,000 cases in a single day. But that's not the only one. You can take a look at United Kingdom and you can see similar kind of huge trend that's emerging, just consistently rising cases. And then rest of the Europe is doing the same thing. Asia, a lot of Asian countries are doing the same thing. I believe Chronicle was pointing out that in Malaysia, non-essential businesses just went into fresh new lockdown once again. And if this carries forward into the United States, then you know that there's a little bit of the same repeat that we saw previously. So Nasdaq is going to surge sharply, particularly e-commerce trends, as well as but the small cap, mid cap space is struggling a little bit, looking at the futures. So just a high level view here. See how the market does. Anyways, moving forward, I have two stocks that are on my watch list. Both are doing very well technically, and both are seeing some very strong channel checks going into their earnings report. Both are in animal health category. So the first one is Zoetis ZTS. ZTS has a very nice technical setup for a breakout. It has been consolidating for about 2.5 months to 3 months in a tight range, and it's looking to clear out through this range. If you look at another way of looking at it is just go to stock charts, and I'll blow this screen up so you can see it closely. You can see how there's so much VOP congestion that is set in between 156 and about 164, 165. It has started to clear that range. Volume surged sharply as well after the expiration. We have seen after September expiration, we have seen a little bit of a better volume come in as well. So let's see if this thing is going to start take out this key resistance that's right over here around 166.50, let's call it, or 167. If I see better volume and such, you can see MACD has flat line, potential bull cross coming. RSI has flat line, starting to bounce off 50, has plenty of room to get up to 70 plus before this thing is overbought. And it's not just Zoetis. If you look at the other one that we really like and endorsed bullish case multiple times, that's IDEXX Lab, IDXX. This is even better looking chart in my view than Zoetis, simply for the fact that we have seen bull crosses and the MACD lines and the total accumulation patterns looking at volume that are far better in this case than Zoetis. And so both of these have a nice technical setup. Now, with that said, the one thing to keep in mind is that some of the things we're looking at in the channel checks that's coming out, starting to come out before the earnings report come out in a couple of weeks, is simple view that the purchasing trends remain robust for a number of companion animal care products in the United States throughout third quarter. According to Bank of America research, as well as two other analysts that are out with their respective channel checks in recent days, when we look at the data that's coming out from vetsuccess.com, as well as vetwatch.com, as well as intra-quarter channel checks based off the analyst day that IDEXX Lab held in the middle of August, basically when they already had at least half a quarter of the view into the third quarter earnings report. So that was IDEX analyst day, middle of August. And on top of Bank of America debit and credit card checks in terms of spending, the total consumer spending on animal healthcare continues to remain strong. It's steady increases nonstop, has been no slippage at all in any of these categories. US vets continue to see strong end demand growth, with patient visit volumes roughly flat year over year, but with revenue per visit up sharply at roughly 10% year over year to 20% year over year, depending on which category you're looking at. These results are well ahead of initial expectations, and Bank of America says we think they should bode well for the space, and particularly for IDEX, given its heavy US companion exposure, and we would see substantial beats across the group. These are very, very strong words coming out from Bank of America. We should see substantial beats across the group. They also go on to say that overall, we view that livestock markets are largely unchanged while the recovery from COVID-19 related pressures is progressing. We do not expect a return to prior levels until sometime in 2021, as producers continue to adjust their herds and the supply chain is still seeing significant disruptions from limited food service dining. At the same time, third quarter could see a better than expected result on some timing effect in US livestock, particularly cattle. In the quarter, placements of cattle on feedlots were up, movements accelerated from a trough in the second quarter, and producers restarted purchasing protocols that were put on hold earlier this year. Put it differently, there is a reason to believe that there was a significant surge in pent-up demand as it came back, coming out from the second quarter lockdowns when the dining places were closed and people were not even going to take their pets to the vets. And now we saw Q3 with a sharp surge as that pent-up demand came back. This is not the first time we have covered both of these names. So ZTS chart is right here and IDEX chart right here. We also covered with a bullish view in the chat room on July 15. And then in webinar during the first week of September, I followed through and recommended buying call options in Zoetis. So I would expect that some of the clients that are watching this video today, they're probably already positioned in Zoetis. Back then, we were looking at a comment that came out from Cantor Fitzgerald based on their channel checks, and they talked about, based on recent companies' comments, we think Zoetis is currently on track towards the higher end of the guidance range, driven by positive trends in companion animal. Visits were down 20-30% in May, but then they were flat as things started to rebound. And then more encouragingly, now the revenues are seen actually positive, and Bank of America believes as much as 20% year over year. So ZTS has seen a nice rebound there. And remember, one of my biggest bull case for the stock since the start of year has been the launch of Simparica, which was pushed back a little bit. It was supposed to launch in February, but then it was launched in April. So this quarter, we're going to see some material numbers from this. And the first quarter sales, when it was launched in a beta testing limited series, was only $15 million in the first quarter of 2020 for Simparica. This is a major product for animal healthcare category, first time in 5 years. But now, when I'm looking at the most recent checks, it turns out that many people are expecting that the third quarter 2020 Simparica revenues could be as much as $47 million, and the guidance that the previously company provided of 100 to 125 million the full year will likely be raised to well above 150 million. And so that's another positive we're going to see. And then lastly, if that was not enough all for Zoetis, keep in mind, this company did launch a brand new competitive service to Trupanion. It is called Pumpkin Insurance. Trupanion is a company that has been on fire. We have traded call options in and out of that multiple times. Trupanion is a pet insurance agency with only 2% penetration for pet insurance market in the US. And so no question, Trupanion is the absolute leader, but we talked about this too. Zoetis launched this on April 30th, a new competitive service called Pumpkin Insurance. I wonder, given the strength in this space, whether Zoetis is going to see some very strong start or launch for this particular product. So that will be another kicker that's not built into any consensus models. And that's it from me. Jay?
Morning, Fahad. So I have two stocks I want to highlight today. So over the weekend, there was a tweet that caught my attention, and it was under my technology column in TweetDeck. The tweet said, Genshin Impact has now grossed over $100 million in less than 2 weeks. Genshin Impact is a free-to-play action role-playing game for the PlayStation 4, the PC, and mobile games or mobile gaming devices. China, Japan, Korea, and the US are the top markets for this game. Without a doubt, the most successful launch for an original IP from a Chinese developer. So I decided to look up the game to see who was behind it. Now, while that didn't bring out, it didn't have Activision or EA listed, it was the engine that caught my attention. This game, it runs under the Unity engine, Unity Software to be specific, which is ticker symbol U. This company debuted last month on September 18th. They priced the IPO at 52. It opened at 75 and it closed at 99.11 on Friday. Unity Software is a leading platform for creating and operating interactive real-time 3D content. As of June 30th, according to their S1 filing, they had approximately 1.5 million monthly active creators in over 190 countries. And the applications developed by these creators were downloaded over 3 billion times per month in 2019 on over 1.5 billion unique devices. Berenberg was out initiating coverage last Thursday, saying that they consider Unity's mobile gaming segment to be its key near-term driver of performance, but they also believe the current share price does not fully reflect the opportunity in adjacent industries. So nonetheless, this is just one that I'll be keeping an eye on. I don't have any other material to tell you about, but nonetheless, something to watch going forward.
Yeah, sounds good. I think I saw a couple of research pieces on this one too. I think there was a very good start for the IPO, and I think that when I haven't looked at the S1 filing myself, but the follow-up research that came on did have some very interesting tidbits. But now that you bring it up, I think maybe we need to go back and actually really research it and lock a research down on this one because there could be something here that we're missing. So good stuff. Thanks for bringing up.
Yeah, and then the second stock, so this was after I saw a KeyBank weekly consumer spending data that comes out, like I said, every week. And there was one section where they list all of the industries and the growth on a month per month basis. And the category was florist, supplies, and flowers. And it said for the month of July, it was up 13.3%. For August, it was up 16.5%. And then for the month of September, it was up 31.6%. So
Wow.
the first stock that came to mind was 1-800-Flowers, ticker is FLWS. Now, I don't know how KeyBank categorizes everything in that category, but nonetheless, I decided to look at FLWS. So besides the 1-800-Flowers brand, they also operate Harry and David, which is a gift basket company, Simply Chocolate, the Popcorn Factory, and a handful of others. Last quarter, revenues increased 61%, and this was fueled by a surge in e-commerce and a strong demand for gifting in a socially distanced environment. They also provided Q1 guidance, which was also better than expected, with revenue growth of 40 to 45%, and then break even to slightly positive free cash flow. And Noble Financial called this a nice surprise, considering that I guess Q1 is typically seasonally an unprofitable quarter. Q1 should also get a boost from the PMall acquisition. This was back in July. They settled a lawsuit with Bed Bath & Beyond, and it ultimately resulted in them acquiring PMall for $245 million. So what I'm probably going to do is gather some more information and provide a homepage article on this one.
Yeah, that would be really interesting. I would like to see that article too, see what else you find out. I do want to point out that back on September 23rd, so 3 weeks ago, we did point out that there was unusual buyers of 2,000 of these December 25 calls. Here's a quick comment from the chat room. Unusual action in this specialty retail company with buyers of 2,000 December 25 calls for up to $3.15, approximately 600,000 bullish bet. Looks like about 1,700 of that still remains in the open interest. That would be the largest open interest than anything else in the option chain. And this is a name that never appears on radar. So one to watch. Those calls are up 50-60% since those bulls entered, and their timing was impeccable. They entered right here near the bottom. Nice looking chart too, continues to make a recovery, and very strong channel checks from those key banks that you pointed out. So interesting one. All right, great stuff. Chronicle.
Morning, Fahad. Have a swing trade idea this morning. The company is Qurate Retail, symbol QRTEA, formerly known as Liberty Interactive. And this is a bullish idea with a 2 to 3 month time horizon. So if you remember a couple months back, I said I was bearish on retail stocks like Children's Place due to lack of catalyst for increased consumer spending. But right now I'm reversing course. I'm turning bullish on retail as we head into year end. I have to stress I'm way more bullish on online retail, not brick and mortar. Couple reasons why I'm flipping to bullish. First off, Thanksgiving, Christmas, and year end are always going to be busy periods. For most retailers, it's all about the fourth quarter. Second of all, we can talk all we want about the lack of stimulus and unemployment as well as downbeat consumer sentiment. But I think come the end of the year, people are just going to be so fatigued with everything that's happened. And on top of that, they can't really go on holiday anywhere far away due to travel restrictions. They can't really go outdoor camping because of the winter. And so what I think will happen, at least to some degree, people are going to say, you know what, this has been a miserable year. We're tired of being cooped up at home, having to watch friends and family lose jobs, close down businesses. So how about this holiday season? We just go online, release all that pent up desire to spend and buy gifts for myself and everyone. Let's bring joy to everybody. I think people who are experiencing fatigue are going to be approaching these year-end shopping festivals with this sort of thinking. Now, obviously, I don't have any channel checks yet to back this up. So for me, this is more of a game theory hypothesis based on human behavior, while consensus sentiment on consumer spending looks to be too, not to say bearish, but too muted based on commentary I'm seeing from sell side. Even without stimulus, I think retail for this upcoming holiday season is going to outperform 2019. And this isn't a consensus view yet. And so I'm looking to front run the positive surprise that's coming. By the time the retail channel checks come out, I think it's going to become a consensus trade by then. And so this is an attempt to get ahead. So coming back to the trade idea, I think getting long Qurate Retail would be a good way to express this view. This is an online retailer that sells consumer goods through web, mobile, and television. As we can see on this image that I shared, the company operates all sorts of mid-income technology, home, cooking utensil, fashion, lifestyle brands like Grandin Road, Garnet Hill, Curtis Stone, mainly via Zullily and QVC. Demographically, the vast majority of their customers are married women and mothers, and over 90% of them tend to be repeat customers. And during holiday season, Qurate says that just under 40% of their purchases come in the form of gifting to friends and family. Now, the three biggest segments of this company are, of course, Zullily, HSN, and QVC. And if anyone's not familiar, what makes Zullily, HSN, and QVC so addictive is that the sales changes every couple of days, and there's almost always some form of flash sales going on. And so this constant refresh of limited new items on sale is what gets users to keep coming back and checking on the website and mobile app. And unlike Amazon and Best Buy, which everybody already knows are winners, this company, I think, Qurate Retail, is sort of a turnaround story, because if we look at this image here, we can see that the pandemic and shop from home theme has done wonders for this company, with total revenue and income up double digits after all those successive quarters of contractions, on top of 29% of their customers being new users during Q2. And their gross margins are pretty impressive too, at 36%. And I think this turnaround story is going to gather steam as we head into holiday season with all this pent-up frustration. I can see, married women and mothers demographic having willingness to spend on gifts, as well as new furniture and items for the home. So if we look at the chart of the stock, you might be wondering what that huge drop in September was about. That's nothing to worry about because the company has high free cash flow generation. And so what happened was the company paid out a special dividend because of their recent performance. And this dividend included $1.50 per share in cash and $3 per share in preferred stock. And so, of course, the stock had to adjust accordingly. But going forward, my target for this trade idea would be a gap fill at around 1050. I would put a stop below the last swing low at around 695. So it's about 3-to-1 risk reward here. But I think the stock is.
Go ahead, sorry.
I think the stock will claw back its value from before the special dividend. Meanwhile, I don't think Amazon and Best Buy will be going up 35% over the next quarter from current levels. So I think Qurate Retail can outperform while not being as risky as toxic brick and mortar names.
First of all, I actually like this name myself too. First of all, you're not really this is not brick and mortar. Just to be clear, this company owns QVC and Home Shopping Network (HSN), which are the two biggest networks in the country. And it also owns Zullily website. So it's all e-commerce. So it's all online, just to be very clear. Secondly, as you mentioned yourself already, don't worry about these ugly gap ups and gap downs because this was all related to special dividends that the company paid out. And then to reflect on what you were saying, I just want to highlight the big points over here. Last quarter, which was the second quarter, company posted revenues of 3.42 billion, beating the street estimates of 3.21 billion, and a huge beat on EBITDA coming at 565 million versus 484 million. And for those who were wondering whether the shutdowns location actually helped or destroyed the value here, you may want to note that Zullily revenues increased by 16% year over year. QVC revenues were up 11%. And Cornerstone revenues increased by 18% year over year. And while you were talking, I was also looking at their at the earnings transcript, and the management pointed out that their free cash flow grew by $1 billion year to date. $1 billion year to date through that's just first and the second quarter. That was about 25% above the same time period last year. And I quote over here from the CEO, the growth was fueled by record-setting new customer gains. We welcomed 2 million new customers to QRG, a 60% increase over the prior period, with double-digit new customer growth in every business unit in every market. I mean, these are the very, very strong trends. So if that was the case in the second quarter, I expect during this holiday shopping season, particularly with COVID cases rising, we're going to see the company actually post the same kind of really strong numbers. So I like this actually. And I don't think that this is out of, this is too much out of, too much of a depressed name or anything. This is a growth name that's actually doing quite well in the particular environment. Stock should go, and besides it's cheap, with a market cap of $3.2 billion and $13.6 billion in annual sales, there's a very significant re-rating potential here. So anyways, great stuff. I like it. All right, gents, we're going to stop over here. Thank you very much for joining, and we'll see you in the chat room shortly.